FIRPTA is not a title matter. It is a federal tax requirement that is imposed on non-U.S. taxpayers. Some areas of the country will specifically refer to a non-U.S. taxpayer as a non-resident alien or as a foreign national. We'll use the technical term of being a non-U.S. taxpayer and what that entails. In general, non-U.S. taxpayers can fall into a couple of different categories. There are specific tests that the IRS uses in order to determine whether the seller is going to be subject to FIRPTA withholding. In the case where a seller does not know whether they are subject to FIRPTA withholding, the IRS test is pretty straightforward. In the first instance, the category of people who are fully exempt from paying U.S. taxes and who are non-U.S. taxpayers, primarily in the Washington, D.C. and other metropolitan areas, might fall into the following categories. Generally, employees of embassies and members of foreign diplomatic corps are not subject to paying any U.S. taxes, but they are subject to FIRPTA withholding when they sell or transfer the beneficial interest in any real estate. Secondly, the other type of person who might be subject to this tax would be a non-resident alien. The last group of individuals who typically fall into this category are what we think of as the traditional foreign investors. That may be somebody who never even came to the United States in order to buy a condominium, let's say in Miami or New York City, and use that strictly as an investment property. In those instances also, the sellers may not think it's important to present themselves to closing as well. As long as we assist and facilitate the buyer in their own compliance with the FIRPTA withholding requirements, it doesn't matter if the seller doesn't present themselves physically. So please don't think that is a requirement. If the sales price is of any amount and the buyer does not intend to live in the property, for example, a non-U.S. taxpayer, a foreign investor, selling to another foreign investor who intends to use a property as a rental or in some other way, FIRPTA withholding will apply 100% of the time. When a non-U.S. taxpayer or a foreign investor is selling a property to someone who intends to reside in the property, if that purchase price is under $300,000, FIRPTA withholding will not apply. When a non-U.S. taxpayer or foreign investor sells a property for a contract sales price between $300,000 and $1 million to a purchaser who intends to reside in the property, 15% of the contract sales price must be submitted to the IRS for FIRPTA withholding. The manner in which title is held to the property by the seller, whether it's an LLC, a corporation, a trust, a partnership, etc., will indeed impact the seller's obligation. For example, a single member LLC domestic entity is a disregarded entity and the seller will be responsible for the tax payment. A multi-member domestic LLC has a different obligation. This is very important to note as more and more acquisitions and ownership of property is held in some type of corporate structure. Throughout the United States, foreign investment in domestic real estate is very common, and we are prepared to facilitate the process for your buyers and sellers in submitting compliant forms and assuring full compliance with the IRS requirements are had.